Today we got the CPI inflation data, which showed that New Zealand inflation lifted further in the second quarter to 2.7%. This means that inflation is already at the peak the Reserve Bank forecast in its May monetary policy statement. And this confirms the Reserve Bank's decision to hold the official cash rate earlier in the month. And despite the weakening economic conditions, of course, and falling home prices as well. And it's worth recalling that during the COVID-19 pandemic, New Zealand experienced one of the world's largest house price booms, which pushed median home values to a record 11.2 times median income levels. That's according to Demographia. Since then, New Zealand has experienced one of the world's biggest housing crashes, which has significantly improved the nation's housing affordability. The core factors driving this behaviour is a sharp reduction in migration, controls on lending for property investors, and a higher path to the cash rate in an attempt to crush inflation. New Zealand tackled the demand side of the property conundrum, leading to a sharp decline in prices, which has dramatically improved housing affordability. But of course, New Zealand also had a recession. To underscore the impact, last week the Real Estate Institute of New Zealand released the house price index for June, which declined by 0.3%. They said that although there had been an increase in the number of sales compared to June 2024, median prices of New Zealand remained unchanged and listings across the country declined. The median price for New Zealand was steady year on year at $770,000, but excluding Auckland, the median price increased by 1.7% year on year to reach $691,500, while Auckland experienced a further decline year on year, decreasing by 3.4% to $990,000. But in Australia, politicians have actively stimulated home prices through demand-side stimulatory policies, such as the Albanese government's 5% deposit scheme for first-time buyers, the expansion of the Help to Buy shared equity scheme, changes to lending rules that prohibit banks from including student debts in loan serviceability assessments, and various state government policies. So here, inflation is still a problem, but it's made worse by home prices and rents rising fast. So my point is this: policy choices make a huge difference. Australia has made a series of really bad choices, and we're now reaping the whirlwind across the ditch. There are lessons we need to learn because there are consequences to such policy decisions, and our politicians need to be held to account.